Morning all, how we doing? Happy Monday, back again. So I'm just getting some bits and pieces ready, one sec, bear with me. It's Monday morning, I'm always late Monday mornings. Where are we? Right. I'm here. How's everybody's weekend? All good? Do anything exciting? I did as little as possible this weekend. Right, so we're going to start off. We've got 6 minutes till Frankfurt Open. We're going to start off with a quick rundown of news this week. We'll have a quick look at the COT report, and then we'll just jump straight into the Frankfurt Open. And then we'll have a look at obviously what's happened over the weekend, FX-wise and indices-wise. Morning, Diamond. Morning, Andy. News-wise this week, we've got nothing today. Flat day today. Nothing really tomorrow. We've got Low speaking tomorrow evening, but that's it. So nothing particularly exciting tomorrow either. All we've got on Wednesday is job openings. And then Thursday, we've got the Euro and CPI for the US dollar. So Thursday's the main news day this week. Apart from that, it's really flat. Nothing much going on at all. Morning, Michael. So yeah, very, very, very light news week this week. Friday, we've got CAD unemployment, and then we've got the University of Michigan sentiment report. So really light week for news this week, apart from Thursday. So be very interesting to see what happens on Thursday with the rate. The rate is coming out as expected, as no change. That is obviously what we're expecting to happen. Quite what impact that's going to have on the euro, difficult to tell, obviously. Last time we had any kind of announcement regarding rates, it went absolutely crazy, and then the market completely overreacted to it and undid the whole lot. So we could see a spike on the euro on Wednesday. So any of you that have got any long positions on euro, this could be the day, Thursday. So we'll see what happens there. But apart from that, not an awful lot. COT report, a bit of a mixed bag on the COT report this week. Difficult to know what to make of this at the moment. I'm not really paying much attention to it because I'm not really position trading at the minute with what's going on in Ukraine. But New Zealand dollar had a massive reversal. A lot of money came out of the New Zealand dollar, which is interesting because the commodity pairs are going up fast. Aussie and New Zealand dollar. So that was the main change on the COT report this week. Apart from that, business as usual. Strong US dollar, weak CAD, strong pound. There's a lot of money came in for the pound last week, which is interesting to see as well. Euro the same, Swissy the same, yen the same, Aussie the same, obviously. So this is very, pinch of salt type report at the minute. I wouldn't pay too much attention to it with what's going on. It's all being reigned by Ukraine, obviously, at the minute. So that's where we are with those. We've got 3 minutes to the open. US dollar opened up with a gap. We've come back down to try and fill the gap very early. Indices, DAX, opening very, very, very weak this morning. I'm looking for a long opportunity to try and get this gap filled to yesterday's low this morning. See if we can get some long positions on it. I had a couple of longs this morning which got taken out. So I'm prepared for longs this morning to try and see if we can get this gap fill done. Whether it's the right play or not, we'll find out. But that's what I'm looking for. Dow, S&P, same thing, all down, all indices down. I think today we're going to get a down day, but I've got a feeling they might try and do the gaps first. So we'll see. But watching the Asian low on the other indices this morning with a view to potentially getting a bit of long action at the open. Morning, Stivier Mayo. In a very speculative, tiny, long pound Aussie, mostly out of boredom. Yeah. I call it the extreme mean reversion game, yeah. we'll have a look at all the RSI levels and everything this morning. Morning, Rahat, after the open. And see where everything is. But yeah, markets got a feeling we're going into a bit more of a tumble this morning with the indices. Well, today rather, and especially and this week, but when, not sure. So I've got some speculative longs open at the moment to try and get this gap fill done, but I'm just waiting to see what happens at the open. So we've got 2 minutes to go. Let's have a quick look at where we are with the... Wow. Blimey. We'll have a look at all that. Is that right? Oh my God. 2? Basically, it's like it's nearly 0. My goodness! Wow. We'll have a look at all that in a minute. I haven't had a chance to look at the Forex this morning because I've got no Forex positions on at all, so I haven't looked at anything. Blimey. Yeah, pound odd, speculative, super long. Yeah, that's worth a go. Right, market's open. Okay, so I'm gathered up into a couple of buys at the open straight away. I've got trailing stops on. It's probably not a bad thing actually today to have trailing stops on. Probably going to get taken out on that. Oh, is that a... no, that's from that one, isn't it? Yeah, sorry. I haven't got trailing stops on. Right. Morning, Ali. Euro odd. We'll have a look at that in a sec. So DAX this morning, we got quite a large gap. I'm only looking for Friday low fill rather than where we closed. That's going to be a roughly ADR move already today. So we'll see if we can get up there this morning. Be nice, very nice trades if we can get up there this morning. So I'm going to keep an eye on the S&P as well. Okay, so the S&P double bottomed at the open with the Asian low. I might just cancel that pending off. I think we're probably going to get a bit of a retracement on this initial push, so I don't want to get into anything too massive. I've got add-ins set on, haven't I? Hang on a sec. I'm going to go the fairly wide stop on these this morning. So we've got this high here, which is the 7 o'clock high. Obviously, if you've got pre-market data, that you'll obviously load more there, but this is the 7 a.m. the official Frankfurt market open for the DAX. I'm tracing a bit now. Wow. 175 ADR in the first couple of hours of Asia. That's unbelievable. Crazy. Okay, we've got 1 minute until the 5-minute close. Just going to adjust that stop down ever so slightly, just under that low. Okay, 5-minute opening range is in. So see if we can get a break of this high this morning. If we can get a decent break of the high on the first 5-minute candle, I think we've got a very good chance of getting those the gap fill done today. 16, so 2.8. All the other indices look like they're pushing as well this morning. S&P's trying to get bullish engulfing in. NAS is putting in a 3-bar reversal. Nice bullish engulfing on the Dow as well. These have all got gap fills as well, potentially to do this morning. And the US dollar obviously has got one to do to the downside, which obviously will potentially push up the indices. What happened to gold over the weekend while I'm looking? So we had a bit of a gap on gold as well. Not a lot, but pushed up. Oil. Wow. Oil gapped up massively. Big gap on oil. 127. God, remember I was talking last week about pushing 120. We gapped above 120. Look at that. 127 a barrel. That's incredible. That's a lot. Who's still got petrol cars? I feel sorry for you. God, 127 a barrel. So, obviously, pre-war, we were sitting close to 100. So we're 30% up, basically, off the back of the Ukraine crisis. It's amazing. Bitcoin's coming down. So is Ethereum. Just keeping an eye on this level here. I've noticed on the DAX, if we don't get these gap fills completed at the moment, it tends to get roughly halfway to fill the gap, which in this case, and I suspect probably in the other cases, is a 61.8 retracement. So I'm just keeping an eye on that level today to see if, when we get there, see what happens. Because if we get some bearish price action there, I might maybe take one off and let one run, or possibly close them both and wait for a potential pullback on them. It's not far away from that low either, so just want to know where that level is roughly in case we do turn and stop there. Thinking about optioning the Brent in light of possible Iran atomic deal talks. Oh, put option. Don't know. Don't trade options. I don't do anything to do with options. If you think it's good, go for it. Added one more tight stop on that. Late last year, I switched from gas central heating to electric. Boy, am I glad I did. Yeah. Yes. I've got a feeling it doesn't matter what you use. It's all going to go up. Even electric. The more electric cars we get, the more demand there's going to be for, obviously, electricity. So I suspect they will put the price of that up as well. You're never going to win. You just have to try and stay ahead of the game, I think. Pound CAD Pound CAD ADR. ADR's lit up like a Christmas tree at the minute. We'll have a look at all the pairs in a minute and just see where we are with everything. Just wait for this opening range to play out. I've got this EA running on my other account, that's why. I was just trying to figure out why that was so tight, that stop loss. I've got the EA running on my other machine with the same magic number on, so it's taking the figure from there, not from here. That's stupid. I can't do much about that in a minute. Stopped out on that one, that additional add. 40 pips. Bit of a retracement going on the indices, the other indices as well at the minute. NAS is holding up okay. S&P and the Dow though pulling back a bit harder, especially the Dow. Jersey buys its electricity from France, so we have prices fixed in advance for a year or so. Yeah, that's an advantage. Hopefully things will be sorted by then. Yeah, I don't know. Who knows? Who knows? I hope so. Kind of want to get back to normal trading conditions ASAP. If there is such a thing as normal trading conditions. So we're still within the opening range at the minute. No breaks either way. I'm not sure playing a gap fill is the best thing to be doing at the moment on this. These indices seem very, very heavy this morning. But got to pick a direction. I think we're going to have a down day today on the indices anyway, but so Dow's coming down very hard this morning. Obviously, we had the pullbacks on all of the indices, so we're looking for next leg down. We're looking for break of the lows on all the indices at the moment. Wow, look at the DAX. S&P, same thing. NAS, pretty much the same thing. So next leg lows we're looking for this week. Whether or not we can do them this week, or whether we're going to get sort of a bit of an accumulation. I don't know how hard they're going to come down, whether they're going to try and put in that sort of move, or whether we're going to get, sort of a more protracted move down. It's difficult to tell. And obviously with what's unfolding, it's going to be related to that a lot of the time, but there's a lot of money coming out of stocks at the minute, and this is obviously being reflected across all of the indices at the moment. Okay, I'm just going to let that play out. You can see obviously what I'm doing here. So I've got the EA set up to scale in automatically and get longs, basically. I think I've got my other EA actually set up. I shouldn't be running the same EA twice on the same account, but I've got the EA set up as well, I think, to go long on candlestick patterns. So we'll keep an eye on that. But let's have a look at everything we've got at the moment, where we are with indices, with the FX pairs, while we're waiting for that to play out, because it's looking like it's going to be a fairly slow open by the looks of things. So ADRs. Obviously ADR, look at that. We've got weekly ranges hit already. We haven't even opened in London yet. We've already got weekly ranges hit. Absolutely crazy. I should imagine we've got some monthlies as well. Look at these monthly ranges on the euro pairs already. And on some of these pounds as well, mainly to do with the Aussie dollar. So the ADRs at the moment, you kind of need to take a back step, because everything is obviously just pushing so hard at the moment. ADR reversals are just very, very, very impossible to tell when you're going to get any kind of bounce on anything at the minute. So the only real thing you can use these for, I think, at the moment is how far have we got today. So things like this pound odd, we've already gone 125 ADR. You typically, even when we're getting big squeezes, we're not seeing much more than 200% on a normal day. We get the odd day where it goes well beyond that. But if we're getting to sort of 200, 300, if you're shorting these things, this is kind of a signal at the moment to say, right, probably time to start getting out of the positions, rather than getting into them, obviously, because you don't want to be trying to trade against these collapses at the moment. There's a lot of money come in for the pound on the COT report last week. But again, we're always a week behind on the COT report. So quite what's happened over the last few days is impossible to tell. So again, we can't really take that into account at the moment during what we've got going on with Russia. So ADRs I'm not really going to pay an awful lot of attention to at the moment, because they're obviously all over the place. The 4-hour RSIs, we'll whiz through. Actually, let's just whiz through all the pairs. It's the easiest thing to do, isn't it? We'll start on the 4-hour RSIs. The hourlies, obviously, you're going to have a lot of the same things showing up on the hourlies anyway. But for mean reversion at the moment, there's only a few pairs you can really trade. So we can't really pay much attention to the Aussies and New Zealands because they're being pumped so hard. The euros and the pounds being dropped like a rock. So the only things we've really got that we can pay attention to is the US dollar, the Swiss, and the yen. because those are the only ones that aren't in massive squeezes at the moment. So, and obviously you can see that reflected in the fact that they're not really lighting up on the dashboard, because the money is all being moved around the euro, the pound, and the Australasian pairs at the minute. So, so those are the ones I've got set up on the dash on the 15-minute. So as I said last week, these ones, when we get lit up to 70 on M15, these are probably worth having a look at on M1 for really, really tight scalping opportunities. But again, no movement on those at the moment so far today. So just we'll be keeping an eye on those. But at the moment, I think I really would much rather concentrate on the indices, because the indices we know are moving. And they're moving pretty fast and hard at the moment, so they're the best opportunities for trading at the minute. So yeah, 2.28, unbelievable amounts of movement. So let's start with the Aussies. Aussie dollar CAD, really, really, really big strong push. We've hit 125 ADR. Have we hit that already this morning? Really? Can't believe it. So 125 ADR hit this morning. It's obviously bounced off of that straight away. This level here, where we've got this propulsion gap, this is the first signs of any kind of pullback that we are seeing at the moment. So we had green candles all the way for the latter part of last week. We've got 2 pullback candles going on at the minute. Whether these are going to continue, I suspect they probably will. Where they'll pull back to and go from is difficult to tell. So we've got this propulsion gap here. We've got a propulsion gap down there. If you stick a fib on that entire move, you'll find that those will be sort of the 61.8 retracement areas. Sorry, that one is the 61.8 retracement area. So shallow pullback would typically be to there, but with the moves we've got going on at the moment, this thing could just pop down to here and just go. So very, very difficult to sort of get into anything at the moment, which is why I think smaller time frames are your best bet. Massively extended on the RSI. Whether or not they will do the difficulty at the moment is how much of that move is safe haven buying moving into the commodity pairs, and how much of that is speculative, which will need a profit take move on. We don't know, do we? There's no way of actually telling this. So it's difficult to tell whether or not we are going to get a profit take move on these, and if so, obviously you would have taken that this morning if that was your thing, and you haven't really had any pullback. So I can't see a way of trading these short as mean reversion at the minute. Aussie dollar Swiss, same thing. We had this pullback off of this massive candle that was put in on Friday, and nothing else since. So, it's just... Sorry, that wasn't Friday, was it? That was this morning. Yeah. So there's no real pullbacks happening at the minute. So if you want to have a bias on these, you've got to say they're going to continue long. But how far is impossible to tell, isn't it, at the minute? So... Again, very, very difficult to tell which way to trade these things at the moment. Massively extended on the Aussie yen. Aussie New Zealand is the only one that we've got any kind of movement on. That one came down quite hard on Friday last week. Just been stopped out of those that long. Doesn't look like we're going long. On the DAX. I'm going to leave that for a minute. I just want to see what happens around the bottom here. I want to see if this is going to continue down. The S&P is still coming down. The other indices are coming down as well. So I'm tempted to take a short on this. But with this gap looming over us, I think we are going to come up and do this. But it might be that it's one of those horribly slow moves back up, and it might not actually come and do it. It might just collapse to the downside. It's whether or not we want to sort of chase this down here. It's coming down pretty hard, isn't it? Gonna leave that for a minute. So Aussie dollar, New Zealand dollar is obviously this one is more tradable than the other indices. The other Aussie pairs at the moment, because obviously this is the Aussie pairs crossed with each other. So because they're both being pushed pretty hard, we're obviously seeing a lot more of an accumulation and spiky moves on this. Obviously loads and loads of wicks to the upside and downside. So this is probably one of the better pairs to be trading at the moment, because we've got a lot of movement in either direction. So lower time frames on this one is probably one of the best things to trade. Directional bias long term, difficult to tell who's going to win out on this one. We're at the moment in a range, and we have been for a good few weeks now, where we've just pushed down, back up, and we're kind of sitting at the minute in this area with a slight bias long on the Aussie dollar. So where we are at the minute is a nice looking long opportunity. Obviously the Aussie dollar is pushing up at the moment, so kind of long on this one, but you've got to be very careful with the wicks on this thing. It's very, very, very wicky. So I'll be looking for long opportunities on the Aussie New Zealand, but it's not going to be a particularly fast mover. 52 ADR. So again, lower time frames, looking for any kind of RSI extensions on this for opportunities to sort of play the ranges on it. Is really all you can do with that one at the minute. But Aussie New Zealand obviously is not lit up on the 4 hour because it's obviously basing sideways because it's the Australasian pairs against each other. So that's the Aussies all covered. Aussie US, big strong push up. The US dollar has been very, very strong, and the fact that the Aussie dollar is pushing up against the US dollar just shows you how much strength we've got coming in on the Aussie pairs at the minute. So these are the guys where the money seems to be flooding into at the moment, which is very odd. CAD, Swiss, sideways. No real movement on this one. Again, that's one that is a good one to trade. Because you've got the Swissy, which is having money pushed in and pulled out of it on a regular basis, and you've got a commodity pair in there as well. So CAD Swiss, basically, lots of opportunities up and down. So trading this on lower time frames is good. You're going to get decent movement up and down on that one. So that's one of the ones that's on the list to sort of look for short-term opportunities on low time frames. CAD Yen. Same sort of thing. The yen, we aren't seeing a massive movement on, which we would expect to see. So we'd expect to see everything coming down against the yen as a safe haven where money would start to get pushed into it, but that hasn't been happening. Big movements, nice big A-shaped recovery on that one last week, and the week before it did the same thing. So any kind of big movement you get on that, you should be able to get mean reversion on that one. So this is one that you can look for opportunities on, possibly even on the hourly. So, I mean, that one's playing out at the moment. We had an hourly extension there. So we're getting decent movement on the CAD yen. So the CAD pairs, the yen pairs, the Swiss pairs, all fairly decent and tradable at the minute. Just change that back to H4. Swiss yen, again, same sort of thing. Swiss franc and the yen obviously moving nice and independently. So these guys you can be playing in either direction, looking for extensions on those and looking for lower time frame entries on them. The euros, yeah, I mean you kind of want to short them, but you can't chase down here. We're getting a little bit of a pullback at the minute based on that Australasian pullback that we had. So the Aussie pairs are pulling back, therefore the euro odd is obviously pulling back as well. So this is an Australasian move. We're seeing the Aussie dollar weakening, which is why the euro is pushing up ever so slightly at the moment. But again, looking for short opportunities still on it, but you have to think at some point this is going to want to come back, but when? And you know, it's being driven by the war at the moment. So possibility of Thursday getting some movement up when we get the news on the rates on Thursday. So that's 12:45 on Thursday afternoon. We may well see a pop on the euro, but until then, you kind of just got to keep shorting this thing, I think, and just keep playing it to the downside. And if you want to take it on pullbacks, obviously, impossible again to tell when the pullback will end. Looking at most recent moves on lower time frames, and just look for shallow pullbacks, really. So good opportunity for shorts there now on the euro. So it's euro odd, euro CAD, same thing, collapsing. Swiss, pound less so, because obviously the pound is very weak at the moment as well. So we are getting some pullbacks on the pound. So again, that one, you may have opportunities to get in short on that on pullbacks. This is looking like a nice little pullback at the minute. But again, we've got a massively weak pound. So you're not going to get the strength of movement in this one that you will get on the other euro pairs to the downside. So euro Swiss, euro CAD, euro odd, obviously going to come down way harder than euro pound because the pound's weak as well at the moment. And euro yen, got nothing happening much in the yen. So again, everything just still collapsing. US dollar continue to push up. So again, euro US dollar continue to push down. Again, this one, the US dollar at the moment is not doing too bad from a strength perspective, but it's not massively strong. So we're getting the odd sort of sideways day followed by a push. We broke out, pulled back, and then accumulated for a few days. So we're not getting the strength of movement that you would expect to see on the US dollar. We're getting multi-day accumulations. We've got a very, very light news week this week. So this could be the week where we have a slight pullback in the US dollar. But again, all going to be driven by war. So, it's going to be a case of you just have to get in with a direction and hope that you've got it right for the day, basically, because you can't really tell from a technical perspective which way anything's going to go at the moment. But US dollar at the moment long, and we've got obviously euro on its knees. So nice short opportunity there. Drop down to lower time frames and just jump in short, basically. Just be short bias on all the euros, because even if you get a pullback on the euros, as soon as that pullback is finished, it's going to come down pretty hard, isn't it? So just have to be looking for short-term opportunities on everything, and obviously euros are the ones at the moment you want to be looking shorts on. Pounds, so the strength that we had coming on the COT report on the pound, obviously that's quite a big boost of speculative orders long last week. That was on the 1st of March, obviously. So, we are a week behind. A lot has happened in the last week. So whether or not that figure is what it is now, no one knows. So I think with this one as well, with a pound, you've got to assume that the pound is going to continue to weaken at the minute. So short opportunities. So looking for pullbacks and shorts. The trouble is, again, where do you pull back to? Nothing seems to be having particularly strong pullbacks. So you either get in like literally nothing, which means you're not going to get the timing on that. You're never going to know when to get into it, or you get in a big strong pullback, which means you're going to get stopped out short in it. Again, very, 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 very difficult to trade. Best plays on everything at the minute, I think, is pending orders underneath lows. So a little bit like I had on that on the DAX. Yeah. So just pending orders above highs if you were looking to go long, and pending orders below lows. If they're going to get triggered and they're going to go, that's how you're going to get into the market. Much easier to get in on pendings than it is on any other order type at the minute, because the market is moving so fast and so hard when it goes, like it is with the pound Swiss at the minute. That's really the easiest way to start getting into these things. So take speculative long and short positions with pendings. So pound Swiss, pound yen, pound New Zealand, all dropping, all really, really hard. So yeah, shorts on the pound at the moment. New Zealand's longs, obviously. So the New Zealand's are all the same as the Aussies. They're all massive, massive pushes. We are starting to pull back on these at the moment, but again, we've pulled back and reacted off of that high. So we filled the gap basically. So potentially this could go from here, or if it is going to pull back to that sort of level there. So again, you just got to look for levels and assume we're going to get back to them, and price action will continue as it normally does. But nothing is normal at the moment, is it? So So New Zealand dollar CAD, New Zealand dollar Swiss, again, they're all pulling back this morning at the moment. Where they're going to pull back to, who knows? Normally I would say it's very obvious, which is what we've already pulled back to twice and rejected. So that kind of level's done, isn't it? We've been that, we've pushed it, we've pulled back to it twice, we've pushed off. So next level on this one, I would say, is there. Gaps. Look for longs out of gaps. Probably the best thing to do at the moment as well. And the US dollars. So again, we've got to be long US dollar at the minute. So looking for long opportunities on all of those. But as I say, you're not going to get really anything on the RSIs. We're not getting deep enough pullbacks to jump in on. US dollar CAD looks nice and orderly at the moment. It's one of the most orderly out there. So again, lower time frames, as I say, that's my that's my kind of list. So pound CAD. See, even the pounds now, I'm not even sure you want the pounds on there. Cross with the CAD, the Swiss, the US and the yen. But I probably only want to look for short opportunities on them rather than longs. But that's my kind of list at the moment of what I think is probably tradable on lower time frames. That's about it, really. So DAX still coming down. Oil is having a little bit of a pullback. So again, oil, normally you would say, right, oil, whacking great gap, play the gap fill. But we didn't do it there, did we? So why should we do it here? Probably going to get a little bit of a movement down below that low, but potentially off again. But how far does this go? What are people willing to pay for oil? The market is just all over the place at the minute. So I think what I'm probably going to do is maybe start an evaluation with FTMO or Top Step or something and try and trade that rather than my own money at the minute, because at present it's very, very, very difficult to find any opportunities on anything apart from indices. And even at the moment with the indices, it's very, very, very difficult to trade those with any sort of directional bias apart from short. And the trouble with trading anything at the moment on these indices is trying to chase them. When you see these sorts of movements, it's very difficult to sort of short this down here, because we know we've got a gap fill and everything in your body is telling you that that's going to happen. However, your brain is telling you that that's probably going to happen. So very, very difficult to get a bias on anything at the minute. So we've got big pushes at the moment on the US indices. We're trying to anyway. Again, these are all trying to do these gaps. Is it worth trying to get another one? Long. Difficult. Morning, David. Thank you for what you do. Well, I'm not being much help at the moment, am I? It's difficult to tell what to do at the minute. It really is. I'm still sitting on the... should really be taking some time off at the moment, because until this thing is sort of played out in any way, shape or form, where we get to sort of... it's a horrible thing to say, but kind of the normality of war, when it's been going on for a certain amount of time, the markets have done their initial adjustments, things start to get back to normal in the markets. But it's a new normal, isn't it? And at the moment we're in that adjustment phase where things are moving so fast. It's difficult to tell what the market's going to do, and it's literally a flip of a coin as to which way it's going to go on any day, and on any event, news event. There's just nothing to give you any real clues technically, and obviously most of us are technical traders, so we're trading off of fundamentals, but the fundamentals at the moment are changing on a sort of bi-hourly basis, so very difficult. Ali, if the US bans Russia's oil, 185. Yeah, I mean, this is that's what's been talked about this morning, isn't it? Biden putting a ban on any Russian oil. So yeah, I mean that is going to drive oil prices up. if it happens. But this is exactly my point. When is it going to happen? So if it doesn't happen, oil's going to start to do this, and then when it does happen, it's going to do that. So what do? Do you take a speculative long here with a stop under there? Do you try and trade that gap short today on low time frames? It's impossible to pick a time frame to trade because you're just getting moved in any direction at any point. This is why I think down here is really where you need to be sitting at the moment, and you need to be getting in super tight. And just trying to grab very, very, very small movements when you can see price action and have a directional bias on it. At the moment, oil, short term, I think we're going to get a gap. We're going to try. I think that's the thing. The market will try and do what the market usually does. But whether or not it's allowed to, based on what happens, that's the thing, isn't it? We don't know at the moment. Is it going to be allowed to do the gap fill? It probably wants to do it. You can see it's trying to do it this morning. So's the DAX and the S&P. They're all trying to do what we expect them to do, which is fill those gaps. But one word from one person or one missile in the wrong direction, all goes out the window. So I really want to take this long based on that hammer. But then again, I just want to short the thing because of what's going on with the euro. Real indecision. Really difficult to decide, isn't it? What's everybody else doing? What's everybody's thoughts at the minute on where things are going to go? And what's everybody doing? Are you trading at the moment? Or are you sitting there on your hands? My thoughts are at the moment... rather than using my own money, I think I would rather go and buy a load of evaluations with other companies and try and get a load of prop firm funding. Because worst case scenario, I'm going to lose a few $100. Best case scenario, I'm going to gain 100k to trade with. And for the next 2 weeks, which is what it would take to obviously pass the challenge, you've got literally a couple of $100 of risk on the table, haven't you? See if that works. Obviously, I'm doing the evaluation at the moment with Elite on the futures, so I shall carry on doing that. And I'm not trading any other accounts at the moment on the futures. See how we get on there. 3 stop losses on the S&P. Yeah, see, this looks like a long. It does look like a long, doesn't it? Just kind of want to long it. Well, my brain's just telling me this gap fill is going to happen, but my head's also saying, "Don't be stupid." Hard, isn't it? It literally is a flip of a coin. For me, I'll be waiting to see a pullback on the DAX, and if it starts to move down from there, I'll short it. Yeah, I'm short euro pound short term. Yeah, I think that's a good thing to do. Yeah, I mean, if you look at this, I mean, where we are right now, it's pretty much all the pullback I would expect you to get. And then short. Just based on, you know, what we're seeing happening. That's really all I think you're going to get out of that. Shorting pound and euro. Diamond, made my daily goal before the market even opened. Well done. Well, what? Stop trading then. If you've hit your daily goal, stop it. That's the key, I think. You know, you got to try and get that X percent in the bank and take it and sit on it. When you've made it, walk away. Because if you can make 1 or 2% a day at the minute, you're doing really well. DM, I've tried your no stop loss H4 M15 strategy, went well, was up 5% for February, but For prop firm evaluation, it needs strategy with stop loss. Which strategy you suggest to explore for this purpose? Well, with any strategy. Any strategy that uses stop loss works with a prop firm if you can make the strategy work, obviously. For me, scalping, I think, on prop firms is the best thing to do. Just short-term price action. Yeah, shorts. See here, I mean, that's probably the best way to trade at the moment, isn't it? Wait till you've got an accumulation, and then have a sell stop and a buy stop in place. One of those is probably going to work out. One of those is going to work out the accumulation, isn't it? Because that's what happens with accumulations. We get an accumulation break. So that's probably the best way to trade at the moment. Is just to bracket whenever you see an accumulation, and just jump on it, and then just add in as we're going down and try and grab 0.5% to 1%. Do that 3 or 4 times a day, and you're done. Sitting on your hands at the moment on the DAX, yeah. Still hedged in GA though. Yeah, we didn't get any gaps this on the FX pairs, which is good. I was expecting or anticipating a few gaps forming on those, which didn't happen. So we didn't have much of an escalation over the weekend, which is why the thing I was worried about was some kind of escalation with NATO over the weekend, which is, I think, what's going to be the next big mover is obviously sanctions. Are sanctions, they're in place. They don't seem to be doing an awful lot. Visa, MasterCard, PayPal have pulled out. So, I think what's happening and what the next steps are in Ukraine with Russia is the sanctions are basically going to affect the people of Russia, and the people of Russia are going to be the ones that sort this out and get rid of Putin, which will obviously stop the conflict. I think that's really all we can really hope for at the moment, is that the people of Russia turn around and go, you need to stop this, because they're the ones that are going to get hit the hardest in the pocket, not the oligarchs. And then it's just a case of what his reaction is to that. So that's what I was worried about this weekend, was something like that happening, where there's either NATO getting involved, a Russian revolution, or something that triggered the next step for Putin, basically to press a button or do something stupid, which would obviously escalate the speed in which the markets are adjusting to this situation. So, but we didn't get that. But again, that can happen at any time, can't it? So, but yeah, I think that's what I'm going to do today. Just sit there and sort of bracket trade and try and scalp a few points out of the DAX and the S&P. But I'm about 1.5%. It'll be 2% down this morning so far. But can get that back in 2 trades. Obviously, I need the market to move. What's the S&P doing? Yeah, it's bearish, isn't it? You want to be shorting this at the minute, I think. But anyway, so that's my plan for today, is just to kind of sit there. I'm going to have a little investigation on the prop firms at the moment. I'm looking to maybe I want to find a prop firm that lets you trade indices on CFDs. But I'm looking for one that will do decent spreads on the indices. So I'm just going to have a quick look at the FTMO demo and just see what their spreads are like. And I might set up an FTMO demo this morning and just have a play around in there. And then I might stick some money in for a challenge on that as well, and see if we can get some funding on FTMO and get a challenge pass there, which will take a couple of weeks. But I want to trade indices really rather than Forex at the moment. Because what I don't want to do is also pass by shorting the euro, and then obviously that opportunity is not there anymore when this is all sort of sorted. So you don't want to cheat yourself by, just getting a prop firm, which is probably pretty easy now. If you hit the button, if you've got a prop firm account now and you put a 3% short on the euro a couple of times, you'll probably pass it pretty much straight away, wouldn't you? But that's just cheating yourself because you're not going to be able to do that every day. So I kind of want to find something with decent instrument breadth and also with a decent drawdown as well. So I'm going to have a hunt around this morning. I don't know if anybody's got any other prop firms they're trading with at the moment on CFDs rather than futures. Did you try a new prop firm about 3 weeks ago? No, only Elite. I'm still trading my Elite account. Yeah. That's futures though, not CFDs. But ideally, I want to find a prop firm for CFDs that has a doesn't have a relative drawdown, and I don't actually know if there are any out there. So basically, if I've got a 5k drawdown allowance, when I get to, or like on a 100k account, when I get to 125, I don't want to have 120k as my drawdown limit. I want to have 95k, the same as you do when you're trading futures. So all these trailing drawdowns that trail your account equity high, they're just impossible to trade because at some point you are going to have 5% drawdown. Fact of life, you can't trade forever without having 5% drawdown. So I'm looking for one that has a fixed drawdown on the account. But I'm going to have a hunt around. I'm not quite sure. I haven't done a real good recap of the prop firms for a while. Have you checked Funded Trading Plus? Unlimited time to hit targets, scaling up, no stop loss requirement. Funded Trading Plus. Never heard of them. Funded Trading Plus. $36 reviews on Trustpilot. They're obviously new then. Single phase evaluation. 6% drawdown. 3% daily. 1 to 10 leverage. That's not a problem using a stop. Have rules designed to make you fail? Yes, so do you. You've got a trailing stop. Real money, simple fail rules. Drawdown last week. No month fees. Trading into weekends. Take as long as you like. However, if no trades are taken over a 6-month period, you terminate. Yeah, mate. Can you hedge? Yeah. Forex, indices, commodities, and crypto. Yeah, I've never heard of these ones. These must be new on the scene. Instant funding. They do instant funding as well. Same as CTI. Single phase. I like the idea of single phase. Risk reward ratio. 125 trades. Oh, you got to get 50% strike rate. You can't have break-even trades. What? Talk about make it complicated. Yeah, I'm not sure about that one. I'll have a look at them as well, though. I'll have a read up a bit later on them. It's the spreads that are important to me because I'm going to be trading small time frames, so I need decent spreads. My Forex funds, yeah, it's not so much the fact that they do indices that I'm looking for, it's the spread. And the most important thing to me is not having a trailing daily drawdown. That's the thing I'm ideally looking for in a firm. Yeah, so if you get a 100k account and you've got a 5k drawdown, you can get to 95k and you fail. If I increase that account to 125k, I still want my fail to be at 95k. I don't want it to now be 120k, because if I have what happens is I have a bad week, I lose my account. I've made 25k. Why penalise me for losing 5k in a week? I'm going to make 10k next week. That's what I'm looking for. None of this trading drawdown. I want a fixed drawdown, which is why I'm using Elite. And all the other, futures. That's the way it works. Lilu with Apex. If you have a fixed drawdown, you can lose 5k on the account. If you make 150k, you can use 55k of the account. That's what I want in a CFD firm as well. But I don't know if they're out there. As I say, I haven't had a look into them, so I will have a hunt. And to trade as well, yeah. Yeah, and to trade I've heard lots about as well. Lilu, I traded with Lilu for a while, but I blew that account, Lilu. Because they trailed my stop. My Forex Funds Accelerated Program. What's that one? Let's have a look at that. Accelerated. $5 or 10% overall drawdown. No daily drawdown limits. Perfect. Overall drawdown is set to 5%. If you have 50k accelerated account, then 5%, that's 2.5. So if your balance equity goes lower than 47.50 and your account is violated the overall drawdown rule. Yeah. So that's perfect. So it's an overall drawdown, not a trailing drawdown or a daily drawdown. Yeah. Much better trading conditions. No shares allowed. 100-to-1 leverage. And you can trade indices with these guys, can you? No daily drawdown. $2,500. Is this instant funding? Why is that so expensive? Is this instant funding? Does anybody know who's about these guys? I'll skip the evaluation. Oh, okay, fine. Right, all right. That's why it's so expensive. Start from 2k up to 50k. Yeah, see, I mean, I don't really want to spend. I've got that in my account. I don't want to give someone 2.5k to get basically what I've got in my account. Might as well trade my own money. I'd rather do an evaluation. So they've obviously got one. So that's their evaluation. See, now you go to a 5% daily drawdown. No good. %8 target. Your account must not go 12% realised, unrealised to balance or equity. There you go. See, that's what I'm talking about. That doesn't work. If my account balance goes up, my trailing drawdown goes up. So if I'm having a fantastic flyer and then I have one bad day, I lose my account. That's rubbish. Can't trade like that. No trader in the world is ever going to not have a bad day. It happens. Anyway, I'll do some hunting. Yeah, all these programs of that's what I'm looking for. Say there is one. Somebody DM'd me about one the other day. I can't remember the name of it. I'll have to look it up. I had a quick look at them, and it looked like they had a fixed drawdown. And that to me is the key, because every prop firm out there knows. I've just got into a long on the DAX. Every prop firm out there knows that there are good traders out there that can produce profit curves that go up. But every single one of these little dips in that profit curve, could be anything from 3, 5, 6, 7, 10%. Yeah. So if I can generate 100% in a year, I'm not going to do 100% in a year without having a 5 or 10% drawdown on the account. Yeah. So what they know that that's going to happen. So if you have a good, lucky 2 months in your evaluation, you fly through the first 10 days with FTMO, you fly through the second day, 10 days with FTMO, you pass the account, you get the funded account, you draw down by 5%, you lose it. The next week you made 15%, but just happened to have a bad couple of days, and that's it. They take the account away, and then you then pay for another valuation. They know that. They know that's what everybody is doing. So I'm looking for an honest prop firm that knows that if they give me 100k and they say you can lose 5k of that, and I increase that account to 150k, it's my profit. Why are you gonna let me do what I like? This is mine. Yeah, you give me this. You've said don't go below that. If I take it up to 150k, Mr. Prop Firm, that 50k is mine. This 100k is yours, right? I can do what I like with that. It's my money. I'm going to give you 10% of it for giving me that to start with. Yeah, thank you very much. But don't make me force me to take stupid trades because I'm 3% drawdown and now I've got to dig my way out of it because I've only got 2% to play with on my account. I haven't. I've got 45 grand to play with on my account, you know. This is where they're all going wrong. Well, they're not going wrong. I know why they're doing it, because obviously they want your evaluation fees. But anyway. Rant over. But there's going to be one out there that does that. I just need to find them. And let's say that person that DM'd me, I can't remember who it was, but somebody DM'd me one that did that. So I'll have a hunt. Good morning, Neo. I'm just about to disappear, Neo. Why don't you just use very small position versus balance? So trailing drawdown will not be hit, because then I can't make as much money as I want to. I want to make 5 to 10% a day. I can't do that if I'm only trading with 0.001% of my account. That's the problem. What I want to do is get in big and get in a few times. So take 3 or 4 really good trades a day that are going to make me 2 to 3% on the account. To do that, I need decent lot size. If I have 4 losers in a row, I don't want to be penalised for having 4 losers in a row because I've just made you 25%, Mr. Prop Firm. This is the problem, isn't it? They all know that we're going to have those losers. Best trader in the world is not going to get a run where he doesn't have 5 or 10 losers on the trot. It just happens. Exactly, man. They want you to lose. They want you to fail. But that's where people like CTI win. Yeah, CTI are completely the opposite. But I don't want to trade with CTI because I don't want to take 3 months to pass an evaluation either. I want to do this now. So 10 to 15 days just to get the account short term, make some quick bucks basically. Anyway, I'll have a hunt, and if I find one, I will let you all know who it is. That's my mission for this morning. Assuming I'm going to get disturbed. Right, so DAX, I've got this long at the minute. I'm going to keep an eye on this one and see if we can get a decent attempt at this gap fill. That 61.8 level is probably where I'm looking realistically for. This thing does. I don't think this is going to be a quick move. This is probably going to be an all-day play up to there. So I'm going to keep fairly decent stops on positions and try and scale in a couple of times on the way up to there. That's really the play for this morning. If that doesn't work out and I get stopped out again on it, I'm probably just going to take a rest for this morning. Yeah, you're quite right. I mean, that's what they're there for. If I had the money to start a prop firm, I'd do it tomorrow because I personally know I've got an affiliate account with Apex. I've seen how many people fail because I see how much affiliate money has got into my account through Apex. So, yeah. Nutty amount. People fail. But I think on average, people probably spend around 3 to 5k to pass a prop firm evaluation, and then they get funded with something that they fail on. If you've failed a prop firm evaluation 5 or 10 times, stop, because when you get that account, you've got a 90% chance of blowing it, haven't you? This is the thing, and that's where they make all their money. There's a documentary on FTMO, and they were very, very clear what the business model was. So but there are some firms out there that I think are doing it a little bit better now, and they are making the money. But all these prop firms out there, the vast majority of them are passing you off to third parties. FTMO and Top Step are, as far as I know, and CTI are the only ones that actually fund you with their own funds. The others are passing you off, so they're kind of like an incubator, if you like, to find traders to pass them off to prop firms who will fund them. So they're third party funded. They're not funded themselves. So it's just finding a good one out there, and there's so many of them out there now. So it needs a bit of a hunt. Right, I'm going to call it a day there because, as I say, I'm not going to do an awful lot this morning apart from trying to play this long on the DAX, on the gap fill. If you're getting into stuff, be very, very careful still this week. S&P is going well as well. So all the other indices look like they're trying as well, but this could well just be the pullback on the next leg down. So just be careful. I want to see these highs get invalidated, get the opening range broken again. Then hopefully we should be off to the upside on those. So Trade Room Plus looks interesting. Various programs, one of which lets you hold over the weekend and not use a stop loss. Yeah, most of you don't need to use a stop loss. CTI is the only one out there that you need to use a stop loss on, as far as I'm aware. Just buying a second position, long. Just cancelling off that pending. Short. CTI is the only one I know of that forces you to use a stop. The others, you can do what you like. But I'll have a look at that Trade Room Plus as well. God, so many out there, isn't there? Nice 2 inside bar just at the open, but downwards. I don't see the 2 inside bar label there. Where? At the open? Ooh. I can't see a 2 inside bar there. For that to be a 2 inside bar, that would have to be a bear candle. It's a bull candle. Not a recommendation, by the way. Yeah, okay, I'll off. I won't hold anybody to account. If you buy a prop firm evaluation, it's on you. S&P just wanted to take my money. Yeah, be careful. Just be careful with everything, period, at the minute. It's a horrible, horrible, horrible time in the markets. You either have days where you will kill it or you have days where it will kill you at the moment. It's just one of those scenarios. But looking good at the moment on this gap fill potential. So I can move my stop up. Right, have a good morning, everybody. I will be back at 2 o'clock this afternoon for the New York session. As I say, I'm not going to do a massive amount of trading this morning. I'm going to be trading this scalp. Be careful on anything that you're trading, obviously, with what's going on everywhere at the moment. There's no news today. There's no news tomorrow. So we are literally trading price action and whatever the market wants to do with it at the minute. So just basically get in and get out as quick as you can on stuff. As I say, scalp what you can is really the order of the day. And if you want to, I would suggest M15 and M1 or M30, maybe an M5 for RSI extensions. We are getting RSI extension pullbacks still, but the pullbacks are so tiny. That's what I say, you just want to get in on very, very small ones. So, and those are the pairs I'd kind of recommend looking at the minute, if you're not going to trade indices, obviously. All right, so have a good morning. I'll be back at 2 o'clock. Anything you need, come into the Telegram group. I will be in there and see if I can pull this 2% loss back this morning. Yeah, I'll be back 2 o'clock. Have a good morning and hopefully see you then.